Jay, it's almost like the pandemic and the lockdowns never happened for big technology. Are you surprised?
Well, big technology was really enabling the stay-at-home economy to function at all. I mean, if we think about what it means to work from home, it's video conferencing, it's messaging apps, it's software as a service where you can access and analyze your data from outside the office. And then even, not even just work from home, but just entertaining yourself from home, playing video games, streaming movies, connecting with friends. All of that is going through cloud computing companies, it's going through video game companies, it's going through social media. So big tech really provided the infrastructure necessary to make any sort of economy work in this environment. So it's not surprising to us that these companies have been massive beneficiaries during this very unusual time period.
And so where are your clients putting their money? Where are they placing their investment bets, Jay?
Well, we see this trade continuing. This is not just a short-term, big tech is coming in to save the day for a few months. This is really an acceleration of a lot of trends we've seen over the last few years. So we've seen very strong flows into our cloud computing ETF CLO. It's investing in a lot of the biggest software as a service companies around the world. Looking at a lot of software as a service in messaging and video conferencing, in specialized enterprise software. These companies are really at the heart of the stay-at-home economy, and we think once they capture those new clients, these enterprise customers that are licensing their software, they're not going to leave. Once you bring it into your work process, it's very hard to fire that company going forward. So we see this as a great recurring revenue source. There's also a lot of interest in the video game space, more of a consumer play, but we've seen a lot of revenue growth in video games. Activision Blizzard growing revenue almost 20% over the last year. It's because people don't have a lot else to do. There's no live sports, so they're playing games.
Yeah, and by the way, those games are often appearing on network TV and streaming as well. Jay, we showed a graphic about Spotify. Obviously, so many of our audience that's watching right now did a lot of online shopping the last 3 months or so, and they may have seen when they hit transact that the website they were on sort of clicks over to a Spotify domain or a Shopify, not Spotify. Maybe they're jamming music as well. Shopify music or Shopify domain as well. How big is Shopify's business getting, and how much flow are you seeing to Shopify, he said?
Shopify's grown revenues almost 50% over the last year, which is enormous revenue growth. What they do is they provide the infrastructure behind these small retail businesses to be able to sell online. So you've probably, many people probably heard about this war between the big companies and the small companies during the stay-at-home economy, where big tech companies, e-commerce companies that have these huge infrastructure apparatuses to operate during the stay-at-home economy are just beating these smaller companies that can't really innovate or can't really transition online. Shopify is what's enabling them to transition online faster. So if you look at really the entire small business world, that's Shopify's client base, and there's so much demand from these small businesses to rapidly innovate and become e-commerce platforms. So the potential is enormous. We've obviously seen very strong returns in Shopify, very strong revenue growth, but it's just scratching the surface of this market.